What is going on, Alpha Hunters? The markets are rolling on this Tuesday, this tubular Tuesday, and we have a day and a couple hours until we get to the FOMC decision for September. Most likely be a quarter point rate cut. I don't see why they would do a 50 basis point rate cut. I mean, they could. I just don't think the data really suggests that they need to, even though there are people talking about it. And they also really haven't prepared the market for that kind of a situation. We just had last month Jackson Hole, so they didn't indicate anything there about massive reasoning as to why we need to escalate our cuts. So yeah, I don't think it'll probably be a 50. I think it'll be a quarter. But today we did get a gap up on the markets, a little bit of a pullback, pushed higher there in that first hour and 15 minutes. Here the past 10 minutes or so, we just had a little bit of a pullback. Nice gap up though on the markets. SPY did gap up roughly 0.4% there, looking pretty good. We did get some data Tuesday morning, but there wasn't anything like retail sales. That was bad. But don't worry about the headlines. Headlines are saying, oh, retail sales is why we gapped up or whatever. But if you take a look at pre-market, we just kind of traded higher all day. We got retail sales right here. See, it got a little bit volatile, but that was basically kind of just where we opened on the market. So don't worry too much about some of the noise. The futures kind of just traded higher basically all night. Anyways, Qs. Take a look at the Qs. Qs. Could be a little bit of an island reversal here. Look at that. Yesterday, gap down, trade lower pretty much the whole day, kind of just chopped sideways the whole day. And then we gapped up above that. Kind of just an interesting little one day kind of island reversal. Or not an island reversal, abandoned baby action there. So, anyways, a little bit of pullback. Q's actually had a little bit more of a gap up this morning, about 2/3% there on a gap up. Currently about 0.5%, which is about where the SPY is currently. Nice little gap up here on the IWM, kind of just chopped sideways. Moving averages came up, pushed it higher. Up 1.5% there on the IWM, looking pretty good. Nice gap up here on the DIA as well. Pulled back in the moving averages, pushed. Currently up about 0.3%. Not crushing it, but just steady as it goes. That's kind of the DIA. Nice gap up here on the RSP. Pulled back in the moving averages. Look at that strong move, though, for about 25 minutes or so. Once the moving averages kind of got caught up, kind of just like springboarded out of here for the RSP, up currently 0.6%. Be curious to see how some of these look on the daily. I mean, look at that. Just the RSP is just grinding higher, continuing. So looking pretty good there on the RSP. The DIA also looking pretty good. RSP, DIA look very similar to each other. Looking pretty solid, all-time high area there. IWM has not gotten back to its late August high. So it's getting closer. But not quite taking that out. Qs, and this is where the plot thickens, I guess, right? We still are well away from all-time highs, and definitely pretty good ways away, even from kind of that late August high. So we are having one heck of a switch form out here on the markets. Probably be looking at that. Probably look more at that tomorrow or Thursday as we just kind of get the FOMC data and things like that. Maybe we'll look at it tomorrow before we get to FOMC. Anyways, SPY, nice gap up here on the SPY. Did hit all-time highs here today on the SPY. So the SPY now, obviously, the switch between it and the Qs is actually happened now. We almost did it there in late August, but we have finally done it. Okay. Nice. It was mostly just hit there on the gap up today, so it wasn't really like an intraday trading thing. So Anyways, as far as how I would play it going into tomorrow, I was really kind of hoping to see us kind of quickly sell off today, and then just buy that dip going into the rest of the day. But since we obviously gapped up, I don't. I think I'd probably just still stand on where I was. Like if we hit all time highs or we went higher before we got to the Fed day Wednesday, I would probably peel back some positions, especially the way the Qs look. I mean, yeah, I just I just really wonder how much we are going to chug higher without the main engine that could. Sorry, Thomas the Train little parody there. Without the main engine kind of just running, with the market and seeing this multi-month change of direction, change in leadership across, the Qs and some of the other parts of the market is not one that I would say is leading to like great strength. I do think there will be some great sectors to be in, but are we really going to say that the Qs, any money that comes out of big tech is going to flow into all the other areas of the stock market? Well, if other areas of the stock market, people have been saying over the past 2 years, are not they're not great deals out there. Even Warren Buffett has said like there's like no, even Charlie Munger before he passed away said there's no good deals out there. So why would you continue to go into other areas of the market when there's no reason to go into other areas of the market? So that's just why I'm like, if big tech and the Qs aren't really leading in any significant way, what's the rationale to go into other areas of the market? I do think probably utility energy commodities type stuff might do well, mostly because I think AI demand is going to continue to go higher, and I think that's going to be a huge variable cost that's going to hit the market. Probably here before, maybe before the end of the year. We'll see when we get to earnings coming up next month, and possibly early next year. Because once that kind of comes in, and you see how much AI is really costing, especially hitting the constraints of the energy market, and then you get the variable cost from the energy market that just starts to skyrocket. I think that's going to put a huge dampening across a lot of sectors, except for maybe utilities. Anyways, taking a look at transports. Transport's rocking steady. Last time they were up at this area, well, they came right back down. So, I actually kind of like this base. I just, I just question like how strong and why this is this strong, because we've also seen other like FedEx, UPS, even some railroads like not say great things about transportation of economic activity. So yeah, I don't get why the IYT is like this strong, in my opinion. But it trades however it wants to trade, and you just gotta be flexible. VIX, VIX, rolling down a little bit. Not exactly getting crushed today, but it is rolling a little bit lower. Okay. DXY dollar index still just maybe chopping sideways here. Kind of back in the lower range that we kind of put in here over the past few weeks. Okay. GLD Gold Trust pulling back makes sense. We had a very strong end to last week, so maybe it makes sense that we have a pullback a little bit here, rest for a couple days. Still would rather be bullish than any dips. 10-year yield starting to kind of slow down this rate of descent here. A little bit of a choppy spot. Okay. I'm gonna zoom out here on the 10-year. Really see if we can. Yeah, I mean we're slowing down our pace to to the downside. So obviously the week is not over. So if we do wind up dropping off here on yields, then maybe obviously we change that tone. But with last week kind of being a little bit smaller than the previous week, maybe we start to base out here over the next few weeks. I don't know. It's just one to keep an eye on. 10 and 2 inversion. All right, coming back down a little bit today. Did throw a nice little upper wick yesterday. We'll talk about a whole lot of yield stuff, I'm sure, on Thursday after FOMC day. I'm not going to worry too much about a whole lot of this yields and bond stuff. Pushing higher on the HYG. There you go. Is it getting close to that 80 level or this top? It is. Yeah, I mean, it's pretty much there. It's pretty much there on the HYG. Okay. LQD getting really close to that 115 level as well. And TLT slowly trying to grind up out here. It's trying very slowly. It's very slowly. All right, as far as sector rotation on the day, healthcare, real estate, staples lower end of the day. Utilities also underperforming. Communications kind of in line with the market there. Outperformers slightly is tech, materials, financials, industrials. A little bit of outperformance there. Energies and discretionaries outperforming there on the day. All right. As far as intraday price action, energies outperforming pretty good there intraday. Materials doing pretty well. Discretionaries, industrials, financials all doing decent. Staples, utilities, a little bit of outperformance there. Underperformers, communications, healthcare, real estate. Big underperformer is tech. So outside of that gap up, tech really is just not done a whole lot.